is Jefferson Aldredge. I am from Cherry Creek Mortgage. I think this is my 20th year in the business, so I have put a lot of families in homes over the years. Does it matter who the mortgage lender is the question. And I'm going to say yes, because all mortgage loan officers / lenders are not created equal. So for instance, I've been in the business a long time. I have put literally thousands of families in homes and helped them go through the process. And taking a family from the beginning of the process to the end, to closing, and getting them through the funding is a very personal, intimate thing, because you're going through that family's issues, you're going through their situations, you're going through their finances. So yes, I think it's a very important issue to be able to pick the loan officer that you want to work with and that you feel comfortable with. Let's talk about the differences between FHA, conventional, and a VA home loan. First off, a VA home loan is for veterans only, okay? So there's a misconception out there that someone who has a family member in the armed services or military could also qualify, or if their parents were, but that's not true. So you have to be in the military or retired, the guidelines that follow to be able to qualify for a VA loan. And as far as I'm concerned, it's probably the best loan because it is 100% financing, no mortgage insurance or PMI. So for the veterans, they've earned it, and that loan is there especially for them. Okay, so number one. Number two, FHA. FHA is a wonderful loan for people trying to buy their first home or maybe their second home. If their credit isn't kind of that 740 plus, 720 plus credit rating, they get a better interest rate. They have a lower down payment, so FHA helps them a lot whenever they're trying to buy that first and second property, okay? So just in a general sense. Does it fit everybody? No, it's not for everybody, but it does help a lot of families get into homes that ordinarily wouldn't qualify for a conventional loan. Okay. Conventional loans are lower debt to income ratio, higher credit score, more of a down payment. Okay, so one of the main things that people appreciate about the conventional loan, sometimes the rates are lower. The PMI will come off after they pay the loan down to below 80%. Okay, on an FHA loan, the PMI stays for life unless you put down 10%. Okay, and a lot of families that are just trying to get in a home, having that 10% down payment doesn't always come that easy, especially if they have to pay for their closing costs. So FHA will fit a family in a certain time period in their life. Then conventional might fit that family as they get later on in life and they sell their property, they move equity from one home to the next, So each loan has a reason for and how to fit into what that family's trying to do. Okay, so you're a first-time home buyer, and your big question is, how do I figure out the cash to close? The easiest thing to do is first talk to your loan officer and say, how much down payment am I gonna have? Okay, once you've got your down payment, you know what that number is, then you can ask your loan officer, hey, how much are the closing costs generally speaking? Okay, every home is going to have a little bit of a different closing cost because of taxes and insurance, but you can get to a general number that should be very close. Okay, now we provide a total cost analysis, what we call a TCA, and I put a personal video for you and your scenario, walking you through cash to close, interest rates, payments, what's in the loan transaction itself. So I try to make it very educational, but your loan officer, if you're working with somebody else, you need to ask them, hey, what are my main buckets in the closing cost? And it's gonna be taxes and insurance, lender fees, and title fees.